Today, the group reports an underlying profit of $3.1 billion, $1.4 billion lower than last year. What's your thoughts on the final number?
The number came out lower than last year because the environment in our main industries have deteriorated a lot. So we're battling in a situation where oil prices are record low and have been low for quite a long period, and the freight rates in the container business have been rock bottom. They've been record low. So it's been really tough for our businesses to deliver the results that we had hoped for. But having said that, we have delivered profits in all the businesses, and we're doing much better than the competition. So I'm very satisfied with the operational performance, but on the background of a very, very difficult economic environment.
Maersk Line has had a very difficult year with freight rates, and in the Q4 we saw them cut another, I think, 25%. How do they make money in this environment?
Well, in the fourth quarter they didn't make any money, which is why we had to accept that we came out at the lower end of our guidance after the third quarter. So it is, of course, impossible for the lines to make any money at present freight rates. But we will have to continue to do what we've been doing successfully, which means that we give a good offering to the customer, we do it at competitive prices, and then we assume when the going gets tough enough, sooner or later, rates will have to at least stabilize.
Large impairments were made in the oil business during the year, I think $2.6 billion worth. What does this mean?
Well, the reason for the impairments is actually quite simple. The oil price has dropped significantly, very significantly indeed, over the last couple of years, and that means that some of the reserves that we have around the world are no longer profitable, or at least with present oil prices, not profitable to develop. So we've decided to write them off completely. That's Angola, Brazil. Doesn't mean that we will not continue working on finding use for these reserves, but with present oil prices we don't see a realistic development. And then in the other end of the spectrum, some of the fields that are already in operation but with relatively short remaining lifetime, in some cases we can see that their production costs are too high under the present oil price scenario, so we've decided to write them down as well, or impair them, as we say, in order to reflect the fact that we don't expect any earnings from them in the next couple of years. So all in all, it's $2.6 billion, and it's an awful lot of money. But I can just say that given the drop we've seen in the oil price, we felt this was the most prudent approach to take.
We're 1.5 months into 2016, and we don't see freight rates and oil prices necessarily improving. What is the outlook for 2016 for the group?
Well, there's no doubt that the outlook for 2016 is challenging. We'll have to work very, very hard to deliver a reasonable result for the year. But we are a very strong player. We are a leading company in the shipping area, and we have some quite good low-cost oil reserves to develop. So we're confident that we can do okay during the year, but it is going to be difficult. But let's not forget one thing, and that is being a strong company. We've done our homework. All our businesses delivered profitable results last year. Means that we are also well positioned to take advantage of a difficult trading environment. So we can continue delivering good service to our customers. We can continue to invest in building up oil fields or ports or the other areas that we'd like to invest in order to create future growth. And if there comes opportunities to strengthen our market position further, for instance, through acquisitions in the market, then we're also ready for that. So it's going to be very, very tough, but let's not forget that it also gives a very strong company like ours some advantages to strengthen our position.
We'll continue with that theme a little bit, pushing you a little bit further than 2016. How does the group deal with the exposure that we have to oil and freight rates when we don't know where they're going longer term?
Of course, we are in volatile industries, and therefore it's very difficult to know where the oil price and the freight rates are going longer term. We've been in that situation before, and the experience is that the companies that are ready to invest and take advantage of also the tough periods an industry goes through are the ones that benefit long term. That doesn't mean that we have to do the same things as we did yesterday, but we will continue putting our people at work and finding good opportunities to exploit in this market, to strengthen our position and take advantage of the difficulties some of our competitors are facing.